Hi, Ed Marco here, and I'm going to be walking you through what's going on in the Naples real estate market. We've been seeing an ongoing decline by most metrics in terms of the overall strength of the housing market, and there are important implications here for anyone buying, selling, or investing in the Naples real estate market to consider. And I'm just going to jump right into this. This is kind of the boogeyman of the Naples real estate market. This is the month's supply of inventory, and it's just pretty staggering. If I pulled this chart back a little farther, we would actually be a little bit under a 1 month supply of inventory. Month supply of inventory is measured by basically how long it would take at the current market, the volume of transactions for the housing supply to run out if no new units were added. I will quickly note that the condo market is getting hit worse than the single family. We've got a lot of newer stuff, newer laws, regulations affecting the condo market. So we just went from an overall average of 11.6 to 12.4. Single family, still 10.4. So still a lot of inventory here. This is single family once again. But with the condo market, so we have the structural integrity reserve studies, the new laws and disclosure requirements. If you really know what you're doing when you're buying a condo, this can work in your favor because now you understand your liability for increased condo dues and special assessments. But a lot of people seem to have trouble figuring it out, and it can be very intimidating if you're not sure about how to proceed. So I'm switching back to all property types. And I also want to really quickly throw in here the Zillow Market Heat Index for Naples, Florida. And you can see here, we are at a 27.67, so a little under 28% market heat score. The lower it is, the worse the market is. And for the first time since they started to measure the score here, going back to 2018, we are now in a strong buyer's market. And what's interesting is in the list of what I presume is more major cities. So Naples at under 28%. The lowest one on their chart of some of the worst markets is Cape Coral. So that'd be Cape Coral, Fort Myers area at 32%, Miami at 36%. So Naples is one of the worst performing markets in the country right now. And here you can see they're grouped mainly in Florida. I do have clients who own properties across the country. And I do know, especially here in the Northeast, some people are still having a pretty good experience selling. Now, the narrative a lot of experts are putting out there is that this means it is a great time to buy. I'm actually going to argue that it's probably a better time to sell than to buy if we're gauging how well our investment's going to do over the next 1 to 2 years at least. And here's the reason why. So I'm going to go ahead and switch back over here. All right, so here's where what can be very confusing. This is median price. And I actually find it a little easier to understand when I switch out to both single family and condo. So because of the comparatively smaller sample size of the Naples market, we do see fluctuations in the data like this, which can throw people off because it could read as, gee, my home, if I'm looking at the median price, my home's up almost 10% or so over the last couple months. And of course, that's not the case. We have to tease out the trends. I'm going to pull Zillow back in here because they do have an adjusted market home price average. And this is probably a slightly more accurate representation of what's actually going on in terms of pricing. So we can see this dip starting in early mid 2024, where it's reporting around 617 and down to 581. Now, in the real world and practicing in the Florida real estate market here, the reality of what I see is almost anyone who bought between early 2022, so technically that'd be down here, and you would think if you bought in early 2022, you should be able to still sell at a pretty decent profit. In general, what I see is anyone selling from this period to current day is generally going to be taking a loss, and that's been the trend for a while. So I do think that there's a little bit more going on with the median prices showing a bit stronger. There are two main factors that lead me to suspect this. One is during the COVID boom. So the COVID boom would be starting over here where everyone wanted to come to South Florida, and our market boomed at a very unsustainable rate. So during that period, it also got the builders very excited because of the bull run in the market. And so they started buying up a lot of land and building. Now, remember, from the time you build for the higher end luxury homes, we normally see about 14 to 22 months turnaround, maybe a little closer to 12, 14 months for more typical single family, maybe a little less in some cases. I do know at the new Valencia Sky development, their builds from the time someone picks out the lot, it's usually, I think, around almost a year turnaround at this point. I was just down there about a week ago. I think that the flood of the new homes that came on the market during this period has kept the median prices looking artificially high and more than people are actually seeing in the real world as on the resale units. And then also with the home affordability index pinned reaching a record low not too long ago, or a record high, so record unaffordability levels. And we also saw a shift in the median average age of home buyers to older buyers. And that's because the older buyers have more money. They're more likely to buy on the higher end of the median price. And so I believe those are the two main factors that are leading to artificially inflated median home values on paper that don't really reflect how much of a hit the market is taking. So let's look at a few other factors here that just speak to the overall strength of the market. And let's look at days on market here. This is single family condo. You can see here condo 65, and I think single family is not too far behind. Yep, 59, up 20% from a year ago. I'm going to go ahead and switch back to all properties. And by the way, one more thing while I'm in month supply. If I go ahead and go to resale units, it actually bumps it up 11 to 11.8 overall, where I'm taking out the new construction sales. Even new construction, we have a lot of inventory in new construction. And for this reason, a lot of people are talking about tariffs potentially really impacting the builders. I think that this inventory around 8.7, 8.1, so 8.5 months supply of inventory is going to be the bigger deterrent for builders. And I've spoken to several builders here in Naples, and most of them say they are still buying, but they're very careful and they make sure that they only move on a project where the numbers really work out. So they're being far more cautious than they were back here when there was very little inventory, extremely high demand. And for whatever reason, people see prices going up at a pretty fast rate and they assume that trend's going to continue often longer than it does. And that's not always the case. And I don't think that's going to be the case here. But let's look at a few other market indicators. These aren't as significant, but they do just point to a softening of the market. So here we can see the median percent of list price declining. Once again, just a sign of a softening market of sellers giving more and more. Still relatively high, sellers getting about 95% of list price. If I were to separate it by condo, 95.4, single family, 95.7. So almost the same discounts off of list price. And I would think with the inventory where it was, we would see it a little bit higher. And I definitely have been seeing more and more properties going for significant reductions off of list price. But I think we still have room to go on that metrics. The number of shows to pending, once again, just a softening trend, a little less market activity. If I went back farther, this would be higher. So 12 in January of 22 to 7 as of March of 25. And this is data that goes right to March of 25, the last month's end. The number of shows per listing. This is, to be clear, number of shows per listing per month on average. And in the Naples area, it is 3 right now. We were around 2.5. So a little uptick there. What I normally tell people is that given the current more extreme buyer's market, that on my listings, I generally want to see at least 6 showings a month as a general rule. If it's only getting 3 showings a month, then it's an average listing, and the average listing is sitting on the market for a very long time. Okay, so I have one more chart I want to go over, and that is some historical data from the St. Louis Federal Reserve. All right, Naples, Marco Metro Statistical Area. I said in the beginning that I thought it was actually still by most measures, a better time to sell than to buy. And here is why. If we looked at what has happened historically with prices for a very long time, everyone believed real estate only went up in price because for a long time it went up just a little bit, pretty consistently every year. And then we had the early 2000 boom. 2004, that's when I started investing. 2005, that's when I got my first real estate license. And 2008, that's where I opened my brokerage. But anyhow, we thought prices going to go up. So even when they started going up at a irrationally exuberant, shout out to Alan Greenspan there, rate of price increases, we still believe they could only go up. And there was a lot of policy counting on that. And then we hit the top of the roller coaster. And this is where we started to see the inventory build up. Then, of course, the market crashed. And while people rightly point out we don't have the ninja loans, the no income, no job, no doc loans, and a lot of the other monkey loans, we have some other factors like credits for inflation. But the big one for me is we basically have a boom on top of a boom. What does a real estate bubble look like? It's a bubble. Could have done that better. And what I suspect we might be seeing here is some kind of a bubble, if you will, where we are at the top of the roller coaster. Maybe if we were on this cycle, we'd be about year in 2007-ish territory, where we're starting to see some of the price declines really start to register. But as long as that inventory continues to go up at the rate it has been, then what I tell people is it is an extremely risky time to buy. Unfortunately, oh, look at that. The bubble graph even works with the inventory. It is an extremely risky time to buy because of my very data-backed approach, not just for analyzing the market, but for analyzing individual properties. I do work with a great number of investors. I have a lot of people asking me to find them a deal. And I explain to them that my concern is that the deal has to be such a great deal that it's factoring in the high potential for significant price depreciation over the next, let's say, 3 to 12 months. And that is very hard to do, to find a deal that's so far below market value that even with all the inventory, that's such a substantial discount. It's extremely hard to find right now. And my personal thinking is I would be very uneasy about purchasing, particularly an investment property, until I see at least 3 months or so of meaningful negative inventory trends. Now, just to be clear, we have seen 1, 2, 3, 4, 5 months of inventory decreases. However, it was very much just rather insignificant leveling off before another massive round of increases. We end by just considering the very basic fundamentals of economics and supply and demand. The supply keeps going up unless there were some factor, and I am familiar with the arguments so that potentially interest rates could go down. I had the same talk on my last video over a year ago, and if the interest rates went down enough to meaningfully impact the market, it would be because we are in a pretty severe recession, in which case that would offset that too. So the only thing that's really going to solve this inventory, in my opinion, that is likely is pretty significant price decreases. I would doubt it would be as substantial a drop as we saw back in the 2006 to 8 period, or 6 to 10 period, if you want, because we have a few fundamentals that are a little better. But here's the thing, I couldn't tell you if we're looking at a correction like this, or if we're looking at a correction like this. So those are the two things. But in either case, I see us as being still fairly early, because remember, this data is only going to maybe the end of 2024, and it's still showing a rise. But if we went back to that Zillow data, we are seeing the prices start to give. And I do suspect we are at high risk for prices to continue to decrease. And so what I tell my buyers is time is definitely on your side. A lot of sellers are being surprisingly stubborn right now and do not really want to come to grips with it. They've missed the market peak probably by a couple of years or so. And so we are seeing this standoff effect. But I just saw in Appalachian Shores a rash of kind of fire sale deals, like a 0.3 acre waterfront lot with a home on it, but mainly land value listed at 5 million, went for 3.5 million. There were some other similar comps there, and these are prime waterfront lots that go right into Naples Bay, accommodate large boats, everything. We haven't seen prices like that in that area for some time. And so at some point, I do suspect we are going to see pretty significant price decreases. So if you are a seller and you're feeling down because you're around here on the slide, my guess is if you sell around here, that you'll probably in 1 to 2 years be looking back and saying, okay, I'm actually really glad I got up when I did. And the farther out we go, the harder it gets to predict whether this is going to continue. Per the data, market's been in some form of correction for at least 2 years. And whether it's going to last another couple years or 1 year or 3 years, it is extremely hard to predict. No one's going to accurately predict that. But in the short term, we do know which way the momentum's going. And I believe by factoring this in, you can make a better informed decision on whether or not it is actually the right time to buy, sell, or invest in Naples. Feel free to reach out anytime if you have any questions. Thanks.